Welcome traders, I am Adam Harris, Chief Market Analyst, and this is Sunday the 29th of October, recording this for Monday 30th of October, and don't forget, of course, Tuesday is Halloween. Spooky. So the question is, will anything upset the markets this week? Will it be scared? I know that's a bit cheesy, trying to incorporate some Halloween jokes in here. This is just so bad, so bad. Anyway, look, there's so much red news. When you look at the markets now, there's just so much red news this week. It's a bloodbath practically. But what I would really be focusing on, so that just means there's going to be a lot of volatility in the markets. Could be a potentially crazy week, just meaning swinging up and down. But I want to highlight and focus really on Wednesday. Wednesday is where the markets are going to be focusing predominantly on FOMC. They're going to be looking to see how the Fed in the US, what their plan is with regards to rate hikes or potentially rate cuts, and that could largely impact the US dollar. And of course, when it impacts the US dollar, it impacts everything, all the asset classes. It impacts commodities, crude, oil, metals, gold, silver, currencies, obviously the majors, as well as the global indices, which are taking a lot of strain at the moment with the higher interest rates. That's really one of the primary, next to that, as well as the cash markets. Next to that's one of the primary kind of things that's weighing on the markets. Then finally on Friday, we have the big kahuna, which is non-farm payroll. And that's just always, for want of a better expression, kind of a crap show. It's just that there's such big swings and moves, and it tends to go one way for an hour or two and then another way for the rest of the day. It's all over the place, so I'd be very cautious. Most traders are not really looking, professional, consistent traders are not looking to engage in the markets on that day. They'll really just be watching from the sideline, because it can set up what happens in the coming week with regards to that US dollar. I stand by the fact that I do think it's a little bit overextended, and it's had a really good run. It needs to just take a breather for a couple of weeks or potentially a month or two, and then it can do whatever it wants to do after that. But that's kind of what I'm having a look at. So without further ado, let's go to the charts. But just before I can't believe I'm doing this. I just said without further ado. Before we do that, I do think we do need to give some credit to the current administration for bringing in or achieving a 4.9% GDP result in the previous week, which is absolutely phenomenal. The last time that was achieved was in 2010. And just remember that their goal is to try to rebuild the middle class. So what they're trying to do is to have a very strong middle class with ideally, which would then reduce poverty, which would stabilize things quite a bit. And also that would require making sure that the top 1% are not taking all the cream off the top and making sure that they do spread it. So that's a better approach of trickle-down economics. And don't just take it from me, that's actually from Ray Dalio, Bridgewater Associates, as well as from his New World Order. So books worth reading, really gives you a broader understanding of how the economic machine and economies work and which ones are more successful than others. So that being said, I'm going to pause this, move across to the charts, and let's kick off with this week's analysis. Okay, so we're looking at the volatility index, and as such, we can just see it has started to move up a little bit higher. Again, I want to emphasize that we were sitting where we are roughly in May earlier in the year, and of course, we've been coming down largely from around about October last year, heading down into where we are now. So the fact that we're heading up a little bit higher, it sort of makes sense when you kind of look at what the last few weeks have been like of the markets. But again, from the sake of perspective, you can see that we really are still sitting in relatively low numbers, and so I'm not too concerned with that. The market is somewhat stable, I guess. Even if we don't like what it's doing, it's not panicking. There's a lot of sort of fear, extreme fear indices, and again, it's saying that the market's on extreme fear, but really they're under pressure from higher interest rates and various other things. We potentially have property bubbles in large parts of the world. We have other certain things, spending is very, very high, and that's also corporations are recording record profits. So there's a lot of other things that need to kind of be corrected, and I think most people would agree with me that if we can have corporations reducing their profits, not paying their upper management these ridiculous bonuses and fees and salaries, we could kind of break that habit a little bit, as well as kind of bringing the cost of properties and vehicles down a little bit. I think everybody would benefit, and most people would say that's a good thing. So if that is the bubble that has to burst, then maybe that is what has to happen. Okay, now let's have a look at the dollar index. So the dollar index here is suffering a little bit here. You see it's lost its trend to the upside. It's started to range a little bit, and it's really battling with that 106, 106.50 level. And again, when we have a look at it on the weekly, what we see is a very similar performance this last week from the week prior to, in other words, 2 weeks ago. Excuse me. Where you can see both candles are actually very similar in terms of shape. Smooth like chocolate. Okay, so excuse me for coughing and choking there. Now, the thing is, it's battling with that level. It is overextended. It's had a really big run, and you can also see the angle of momentum has started to shift. Here's the thing. Several things can be true at the same time. The dollar is strong. It's not too overextended on the monthly, which means it does have that potential to head higher. But it is overextended on the weekly, and it could do with a bit of a correction. So these are the things that could be true at the same time. It's definitely battling here, but you can see that the pressure for it to break out to the upside is slightly greater than the pressure for it to have a correction. And so actually nothing's really changed from my perspective over the last 3 or 4 candles here, where yes, I think it needs to correct, and certainly I think a break and a close below this 105 would be a clear signal that it's going to have a correction down towards 103, which means we would see a very big boost in the euro as well as sterling, and obviously some of the other majors. The Kiwi dollar is very strong. I want to have a look at that today. However, that might not happen this week. Really need to see what's going to happen here if we're going to break a little bit higher. I've got to be prepared for both. It's having a little bit of a consolidation here. Technically, if you think of this as a bear flag, so if you, a bull flag, I beg your pardon, I always do that. If you think of that, we started to breach that to the upside, which means, and especially this looks very much like a nice, strong triple bottom or a break to the upside, looks very bullish. It's certainly leaning bullish, okay? So that means that I am prepared, although it's battling here. There's a lot of dollar buying happening underneath here, and therefore there's a fair chance it's going to continue to push to the upside. Okay, let's have a look at euro dollar. So I mapped out this possible path here for euro dollar to move higher, but you can't really have both. You can't really have a super strong dollar as well as a strong euro. What I mean by that is not within the context of what we have now. Yes, both economies can do well. Yes, they can both be strong, but when that dollar is really motivated, nothing else can stand in its way. All right, so just want to highlight that. Yes, there is the potential here. We've pulled back. We finished with a little bit of a bearish slash, not super strong, not super bearish close on euro dollar. So there isn't as much selling pressure as you might think. Things can still change. That's the difference here. My little dog is deciding she's going to go chase squirrels. So if you hear barking, you know what that's about. So we've got high lows, high highs here. And I think again this week, I really would be paying attention to breaks high or low. And when you think of all the news that is coming this week, there's a fair chance that this week will be the deciding week as to which way it's going to go. So if we do end the week with that euro closing a lot lower, you can immediately assume that the dollar has managed to break to the upside. If we have a look at sterling, you can see sterling has sort of dripped a little bit below, just tested below that upward sloping trend line. And if you look at the weekly here, you can see that the pressure is much more to the downside than it is, say, with the euro dollar. So there's heavy pressure on that. But this is where it gets kind of interesting to me. We look at the Aussie dollar against the US dollar. It's range bound for the moment. It's a lot stronger, and it's been putting on the brakes on the monthly over the last 3 candles. Once it starts to kind of extend those tweezers, shadows, tails, long tails underneath the candles, it's putting on the brakes. It's really trying to slow down where it goes. So we can see that with Kiwi dollar as well, despite the fact that it did close lower, that Kiwi is also showing signs of really getting tired of kind of hitting lower. But it is also, this is a very clean break and a retest and a strong rejection of that level. And potentially now you can see trying to push back up and then pushing back down. So it's interesting when we have a look at the differences, what's important to take away from that is that because each of them are displaying slightly different behaviors, that actually means that the US dollar is not in complete control. If you go back, if you want to see what I'm talking about, go back to last year, a year ago, you would see, in fact, not even a year ago, it has to be before September last year, you would see that everything was just moving in line with the dollar. So if the dollar went down, everything else went up. That's the kind of thing. Okay, so have a look at dollar yen. Dollar yen is no doubt really battling with this 150 level. I'm curious to see if this is a false breakout. Traditionally, the rule is with technical trading, if you move back within 3 candles, it is a false breakout. We've got bearish divergence here. So we've got this sloping trend line, MACD's trending lower. We've got technically a false breakout, and we've got a lot of failure at a major fundamental level for the Bank of Japan. You've also got the behavior of the charts, the candles becoming smaller and smaller and smaller. And you can see where we are to previous highs. All of this, if you had a technical checklist that said, we are going to see a reversal in dollar yen, this would be it. All right, so this week, I think it's super fair to expect that there's a super high probability dollar yen is going to close much lower. All right, dollar Swissy. I mapped this out because it was looking really strong. We've almost got an engulfing bar here, and we'll have to see what happens with that. If we break the high, I think that's worth noting. If we break the high this coming week of actually the week of the 16th of October, see what's going to happen there. It's still in an area where within its downtrend on a monthly time frame, it could continue down. So dollar Swissy here has a slightly different story happening. It's saying to me, actually, I could go either way. I look bullish on the weekly, and actually I have the possibility for just a straight continuation to the downside on the monthly. Dollar CAD is looking bullish. It is at a key level, and therefore this could change, but it's broken its downtrend on the monthly. It is looking beautifully bullish, if not maybe a little bit overextended on the weekly, and certainly fairly overextended on the daily, not ridiculously overextended. And this was a great one. This was such a straightforward trade, a break and a pullback and a bullish engulfing candle and take on. You'd be at about 2 to 1, 1.5 to 1 on that trade at this point in time. This looks pretty good. Okay, except for the fact that it's sitting at a major level. So what does that tell me? Well, if we look at all as we've looked at so far, all of them are sitting very close to or at major levels. They've all got slightly different signals happening there, but all of them have the ability for that dollar to play a part. That's a key thing. Let me repeat that. All of them, based on where they are, based on their look and shape and feel and the location, and with the news coming up this week, that dollar could fairly change that. And I say that because there are times when it's clear the dollar's weak and the dollar's strong, or it's clear that they're not too concerned with what the dollar's doing. But this time around, you can see that it's actually 50-50, meaning some of them are doing their own thing and some are watching the dollar. And so the dollar could turn out to impact that or not. Okay, so there are times when it's much easier to know what the market's going to do in its immediate next move in the coming week, and sometimes it's a little bit trickier. This time around, it seems to me that it's just saying it could go either way. Not to say that it doesn't have any ideas. A lot of them are signaling something, and some of them are signaling, well, I could do either way. And that's why there's that uncertainty. When we have a look at gold, again, gold is very much overdue, but it's had its retracement. This means it's super, super bullish. It's continued to push higher. I was expecting this to head down towards 1940 at least, or at least that's what I would have thought would be a very nice correction. But you can see here it's already starting to push on. It's going to start to battle as it heads towards 2,100, and certainly around that 2,060, 2,050 area, it's going to battle on that. But look at this monthly bullish engulfing candle. So gold is super, super strong. Usually with this type of behavior, I would say that's it for the previous highs, because this is so strong and it's so engulfing that it has engulfed all the way back to April. That is such a clear signal after being so messy that basically says, this is it. I'm going on to new highs at this time. Silver, in comparison, has just produced a very meh candle. Not much. It's still a downtrend on the monthly. Low highs, low lows. So it's tagging along, but it's not in the same game. All right. Copper, all right, looking a little bit bullish off this level, still within a downtrend, and you can see the daily here is in a range, is trying to break out to the upside. Natural gas, I'm always talking about how this one went from a downtrend to signaling it wanted to turn around to ranging to trying to break to the upside, but for now it is still stuck within this range. That is very super messy. But what it does tell you, especially when you look at that monthly chart, it tells you that when you do move, when you do ultimately move, it's going to bullet, whichever way that goes. And I think it's more likely to go up than down. Crude oils. Right. Crude oils are essentially a mess. We've got a lower high, which means we could potentially have a high low and continue up. There's no clear direction. It's essentially forming a triangle, which means it's got buyers and sellers above and below. It doesn't really know where it wants to go. When you look at it from a monthly perspective, it's looking more bullish than bearish. So the level you want to watch with crude oil is going to be, let's have it here at the close. Whoops, move my mouse, 89.37. Once we break above that, we should surely be starting to break a little bit higher. So let me pick this up and just go and place that. There's that, my 89. No, I'll do it over here. Okay, so that's my 89.37. That is going to be the level that you want to watch. Once it breaks back up above that, it'll pick up and accelerate. Let's have a look at and compare that to Brent crude. Brent crude also very similar thing, and I would just watch the close of the previous candle and this. Why would I say that? Well, because the close was as high as it was able to close in the past, and if the market starts operating, and then it couldn't do that in the last month, it could do it, it could close at that point the previous month. If it starts going back up above that level in the coming week or within this monthly candle, it's a continuation. That's effectively what's happening. It's saying, you know what, we're happy to go back to operating above that level where we weren't able to close above before. So we're starting to swim back in that area, which means that actually, if you talk about it, it was above this level. So if you take this level here, the close at 91.03, it was above 91.03, obviously at some point, then closed at 91.03. Then in the next month, which is in this month, it was able to go back up above it, but couldn't stay above it, fell below it, and is now potentially within the same candle going to go back over it again. All right, so it tried, then failed. Now it's going back over it again. It's likely to succeed second time around. Hopefully that makes sense to you. All right, let's have a look at the global indices, because I want to keep an eye on the time. I really want these videos to be between 20 and 30 minutes maximum. And if it's 30 minutes, it has to be because it's really worthwhile. There has to be a reason to be talking about it. Okay, so again, we're coming back down on this. So now we're on the big one. I had a chat with somebody that I mentor as well, and I was saying that, look, one of the things that I learned from the people who train me, who I consider some of the best traders ever, is that when it comes to the stock market, and this is influenced and confirmed and reiterated by Warren Buffett, Charlie Munger, Ray Dalio, all these things, is to actually be positive with regards to the markets. The media is going to do all the doom and gloom, so you don't need to add to that. You need to be positive with regards to the market, meaning that you have to assume at some point, even if that it's going to recover, because it always has. And then, of course, there's the argument, well, historic performance or past performance doesn't guarantee future performance kind of thing. But the fact of the matter is that the markets have always done that. We also know the US economy is doing really well. And this is where a bit of people struggle, because they're trying to, well, if the economy is doing well and people have plenty of money and all that stuff's kind of happening, you're hearing stories about people struggling paycheck to paycheck. And that could simply be that over the last 20 years, we've got things such as subscription fees and all these things that have crept in that add up, so you're bleeding. It's sort of death by 1,000 cuts, that you are spending money without even realizing it. So there's lots of things in which, yes, maybe our lifestyles have become, not through our own mismanagement, but just there's so many products and things and ways to spend money that it has. And of course, that's what the companies want. And that's not a paranoid thing. That's just that's what corporations want. They want profits. They've got used to profits. So now when they're not making as much profits, but they're still profitable, they complain. They go, oh, no, it's a recession. Everything's terrible. So actually, no, potentially we could all do with a bit of a diet with regards to spending. That's all I'm saying, okay? So just to go on with this very quickly is to say that, yes, it tends to be a better way to pay with regards to optimism. But I would mention this. And so I've upheld that optimism because that is actually a better frame of mind to have stuff. And the reason to do that is when the market starts to show, you need to not live in denial. If the market is in a downtrend, which it currently is, and I'll talk about the technicals right now, but at the same time, if all you're thinking is doom and gloom, you're not really going to be able to see the market when it starts to turn around, because your brain is now in doom and gloom mode, and therefore you're not really going to be able to acknowledge that it has now started to become bullish. And this is why people do not see the bottoms of the markets, because they're wallowing in self-pity and all kinds of stuff, okay? So what we want to do, and that's not really what I mean, I'm just saying the media is not going to be helping you. The media is not going to come to you and go, oh, it's bullish now, don't worry, just pull the trigger and start buying stuff. That's why people don't make money doing this. We have to be able to observe it. So let's have a look at the markets technically and talk about where those key levels are. So I would say this. We haven't broken the previous low. And I really want to check the high. So we're talking here on the Dow. Let's just have a look at what its previous high was over here in December. The high of this was 36,120, and the high of it in July was 36,170. So we had a slightly higher high, but effectively a range. We haven't broken the low here. So you could argue that if we are in a range, we would expect this to turn around prior to this low. Okay, so I'd look to see if it's going to turn around if we are stuck within a range. And again, that would tie it up with that 50-period moving average, and we would see a bit of that bounce. So that's what I'm going to be looking for this coming week. It's a little bit overextended to the downside. Now, when I talk about technicals, my own technical checklist says that if we have lower highs, lower lows, we're below the 50-period moving average, the MACD is below zero, all of those would argue that we're in a bear market. Okay, so there's a slight contradiction here, because according to the weekly, we're in a bear market. All right, and according to the monthly, we are not in a bear market. We're in a bull market. So I'm gonna say to you, yes, technically the weekly we're in a bear market at this point. I think it's sufficient to say that. But on the monthly, I said there's actually still a chance it could turn around. So in other words, that we'll know more. And part of the reason we'll know more is because when price comes up here, it'll fail again. We'll produce another lower high, and then when we break that low, then all hell's going to break loose, because it's usually around about that time you get the crowd volume and panic and capitulation. So we're not at that point yet. S&P. If I look at the S&P, what do we have? Technically, yes, we have a downtrend, and according to my rules, we're below the 50, MACD is below zero, so we're technically in a bear market on the weekly here, but we're coming into a upward sloping trend line for this, so we're going to see if that provides any bounce. And for perspective, we haven't even come back down towards that 50-period moving average, where we could possibly find some support, and we are still in an uptrend on the monthly here. So we haven't broken into a downtrend such as we had here. So we have mixed signals on the monthly, and also for fun, I just put in a channel to see if we stayed within the channel. We're not. We've moved below that. And so yes, we are now bearish. The really big thing is going to be watching is when we come back up to these levels, are we unable to break up through that level of support, and therefore that sets up the next move to the downside. If we come all the way back up here, we're not really in the clear again, we will not be, I will, let's do it by my own rules. I will not say we're back into a bull market until we really sufficiently break back up above that level. It depends on what else I see before then, but for the most part, we need to break and close above that. That's going to be our level of resistance, and we'll see what happens with that. So let's call it that. Let's say, yes, the weekly is technically in a bear market. The monthlies are not there yet, and we're going to see what happens generally between now and January, which is going to happen like this. We're going to have to see what happens there, but generally that's where we get to see how the markets are going to respond. And it's interesting because even here, I put this in as soon as we started the swing high. I put this in here saying this is a great area for it to turn around in. And it's still a very good place for it to turn around in. So I'm just going to move it a bit because I want to see where the low of the candle is over there. So anywhere in this area, we produce a bullish candle, which let's just say, I don't think is going to happen this week. So it's not going to be October. But could it be November or December? Sure, it could. Maybe not ultimately, but in this area, if we produce a very nice bullish candle, that would be a great sign. That would probably be the bottom of it. But that's something you have to wait and see. We've clearly got a downtrend here. We're coming down to the 50-period moving average. So actually, according to my technical rules, the NASDAQ is not in a bear market. And it's important. We have to have all of them in the same place. You have to have, or at least you have to have the majority of them in the same place. Then we move away from the, well, not from the US just yet, the Russell 2000. And this, I think, is worth mentioning here. This is now small cap companies. All right, so this means that there is a portion of the population of corporations and companies that is broken to the downside outside of its range. Yes, remember that within 3 candles, which would make it within the next 2-3 months, if we break back into that range, then it's a failed breakout. But for now, we have broken out. I think we're going to close outside of that. Let's accept it, which means we're going to see a move to the downside. So yes, and I also think that if we get bubbles bursting in certain areas, we're going to see drops in some of these markets. And that's, again, possibly just a market price you have to pay because there will be a point in the future in which they recover and go back up. Let's have a look at the FTSE. So the FTSE itself has started to move lower. Okay, it's sitting at the bottom of this range. I'm going to expand the range now because we've got multiple touches at that level. And yeah, if possibly we're going to see if that's the case, but it's range bound because we actually broke the highs recently. We're just ping-ponging between these levels. So this week, I want to see if we break to the upside or break to the downside, but there is pressure. There's no doubt that there is. All right. One thing that I would urge you to think about is when you hear about people saying, I want to buy at the bottom of the markets, this is kind of that period in time when people are starting to look for those opportunities. So just remember that despite all the potentially all the negative vibes out there, this is kind of when we start looking for those buying opportunities. Obviously, they have to meet certain criteria. I'm just saying, this is that time when everybody's going, oh no, I need to sell and panic, that other people are going, I should start looking and buying. I'm just pointing that out so that if we do recover, when we recover, that people can't say, oh, well, I wasn't told, nobody told me when to have a look at the markets. But those would be fundamental. I have to actually distinguish the difference. Technically, this is not a buying period. Technically, this is not a buying period because there's no signs of the market turning around. When that moment happens, it'll be in a video of mine. But fundamentally, people start going, well, if I'm thinking long term, this is when I start shopping. Okay, so let's have a look at the DAX. The DAX had a further down week. It's back into the 382. From a monthly perspective, that's essentially what I'm saying. It's retraced back here. It's still close to the moving averages, coming back into these previous highs over here. And it's only back at a 382 retracement from the lows. So again, not terrible, but just highlighting that's where we are. So for a lot of these, we're only really just starting to reach the point where they would potentially turn around anyway. Did I mention the FTSE? I had a look at the FTSE. Okay, the FTSE is within the range, the ASX in Australia, breaking to the downside. So all of these looking a little bit more bearish. However, I would mention it's sitting on that 50-period moving average. But it is lower highs, lower lows, marking that area. I'm actually going to remove this because I don't think that that's adding the kind of value we need anymore. And let's just get rid of that as well. And let's just see ultimately what happens with that. And then the Nikkei. So Nikkei to me in a very nice area for this. Remember, this was a late kind of bloomer, then a beautiful breakout, then it very much needed a correction. And now it's in that area. So in an area where it's actually starting to try to turn around. A little bit of a double bottom attempt here to turn around. We'll see if it succeeds in doing that. Cool. Let's move through the individual ones relatively quickly. We don't need to go into too much detail because we've just looked at the indices, we kind of have a sense of what's going on. I would just go through and comment on anything that I think is noteworthy, commenting on it. But let's have all of this analysis just fall within the general theme of what we've seen above. Here you can just see downtrend coming back into a major monthly level, as well as the 50-period moving average. And we'll see if we get a response between now and next week. Amazon actually having a relatively strong week, closing above that level of support, and actually within the monthly it looks really nice, but it is an indecision candle and we're not safe in the safe clear, or in the clear yet. We're not safe yet. AT&T still stuck within its range, looking bearish. ARC continuing to go back down to the previous lows, so still under pressure there. I'm sure there's a story there. Glencore stuck within its range, but actually having a relatively positive week and stuck within the range. So it's not all doom and gloom. Some companies will do well during recessions. Some companies might do well during bear markets. You can see strong failure here with Tesco. I'm looking for potentially a big bearish candle that's going to form here, that's going to signify that it's going to head lower. Until then, any kind of a bullish candle that closes to the upside here would then be that it shrugged this off and managed to go higher. Doesn't look so bad on the monthly there yet, so Tesco's doing okay. Makes sense. People start, when times get tough, people start spending less. They start shopping at places where prices are more cost effective, and that ends up being places like Tesco do very well on that. So here's your breakout candle, closing really near the lows and a subsequent failure. So AXP does have a lot of selling pressure on it and potentially is going to head lower. That's Amex, by the way. Berkshire Hathaway still coming down, but again, look at this retracement within the monthly. It's in a beautiful prime spot to turn around. This is what I've mapped out for what I would expect it to do. It looks good. No worries with that. I can see a squirrel that's wandered through my garden and it's holding its life in its hands, because if my dog sees it, it's going to go bark at it. We see Coca-Cola trying to stay above that level. That's good. I would watch that. But how this closes is very important. If it closes as a nice bullish candle above that level, it's solid. If it closes anywhere in the area it's closing now, it's probably going to continue down in the coming months. So there are times when it's a fail and you can see that the next candle is just going to keep going down. You know that. Indecision month for BP, which kind of makes sense with crude oils. Exxon taking a bit of a hit, but actually this is a range. You can see here with the highs and the lows. Don't mind me. I'm just going to add this in and just draw that kind of down to about that. Let's see what happens with that. So that's what we have there. We have General Motors breaking to the downside. So there's a couple that have done that. I'm almost certain, I haven't even looked, but I'm almost certain we'll get to PayPal and a few of the others that are doing that. I do think it's worthwhile mentioning that some have really, really struggled to recover over the last year, and a few others have just taken off. And there's been that sort of divergence. And that could be a good thing. That could be an indication. I'm just saying some companies are continuing to thrive because they weren't necessarily that overvalued or overpriced with regards to their services. JP Morgan coming back down. This is a bearish engulfing candle, so there's a lot of heavy pressure on that. We'll see if it ends up coming back down towards these lows. That's happening there. Adidas, not doing too badly. Bit of a recovery and stuck within this range, but not as much heavy selling with that. Meta, as I said, really needs to have a bit of a correction. I wanted to come down to 245, but I'm thinking 250 possibly here, or even just lower than that, 273, back down towards those lows. You can see it's battling on that, stuck within a range, bearish divergence, a lot of failure here. I'm looking for a nice bearish candle. Maybe that'll be this week. Maybe we'll get that capitulation this coming week and see what happens there. Morgan Stanley as well, under heavy selling pressure, similar to gold. What did I say it was? Similar to Glencore. No, it wasn't Glencore. I was talking about JP Morgan. Okay, under similar kind of pressures. We'll see if this can hold above the 50-period moving average, but heavy selling there. Okay, NVIDIA starting its correction very, very slow. So here's another example of a corporation that desperately needs to actually come down, needs to work its way back to these areas. Okay, so NVIDIA definitely needs to come back down to 372, and it would be very healthy for it to come down to 336. Netflix holding. Netflix is holding. Going into winter, everyone's cuddling up, watching TV, curling up, possibly people increasing their subscriptions. Nice little break and retest, and so far bullish candle. Not bad. PayPal. PayPal, yep, dropping low as we would expect. Not anything to say on that. Spotify staying in this area here as well. Interesting, because it's almost a bit of a failure. It's a failure at that level to break above that, but a very strong bullish attempt. Anyway, Spider, coming down towards those lows, definitely feeling a lot of pressure when you have a look at it. This is, effectively, this is an ETF. It should be performing. And that looks potentially like a big head and shoulders, which means that, yeah, there's a fair possibility. I'm going to put this in. We might see this break down towards these lows. I'll just put it there. We might see those lows. We might see this go down towards 50. So that'll be interesting there. FedEx, Okay, FedEx just having a normal correction. Doesn't look that bad. This is a good area for it to potentially find some support in. So that doesn't look bad. Tesla looking relatively bearish, but it's got to get below this 50-period moving average. And it's still in an uptrend, guys. This is high, low, high, high. Excuse me. The nerve, absolute nerve of that squirrel. All right, so that's still an uptrend and still could potentially work quite well. We've got Vanguard coming into these all-time highs. Good area for it to find some support. These are all areas that when it does find support later on, 2 months from now, you look back and go, well, it was obviously going to find support. It's when it falls through that area that I think there's something to be concerned about. Disney still trying to turn around here. The earliest signs of bullish divergence here. And so this is an area where it is desperately trying to turn around, but similar to natural gas, we're going to have to see if it can do that. What you could say is it's gone from a downtrend into a range. The question is what happens then? Then we have a quick look at bonds, just very quickly. No real change here. It's trying to produce a higher low here, so no shift in that. What does that tell me? It says, well, the love is still not necessarily there, at least for the 10-year treasuries. And Eurobond, let's have a look at that. Also trying to turn around, starting to try to form a double bottom there. Definitely worth highlighting that then because we're starting to form a bit of a base there. Okay, cool. So again, all of these we could see maybe a year from now, we see the markets go down a bit and then we could see treasury start to climb, but we're not seeing that yet. And it's too soon to say that that's going to be the case. Bitcoin being the biggest mover, we still haven't had a correction to the 382. We still need to have that. I mapped this out because it has that potential to go. Excuse me, it's broken out of its consolidation. I still think we're going to see a correction down towards the bottom of this range. So still waiting for that to be the case. How's Ethereum doing? Ethereum had its boost as well. Solana is trying to break higher as well. It's nice to see, just to see cryptos moving because they really haven't done a lot. But to assume that this is going to be the next bubble and this is going to be where all the new billionaires are going to come from, it's a little bit premature to see if that's the case. But they are holding up better. You can see the failure at this point. They do need a correction. They need to come back down before they go back up. But yeah, they are finally a little bit of a jolt of life into them. And there it is from me. So I would say this week, please be cautious with that increased volatility. Of course, there's still going to be some nice trading opportunities, but the question is really going to be where that's going to be. It's possible currencies could provide a big chunk of that. Gold is looking pretty good. I have to say gold is still, relatively speaking, my favorite. And then I look at the global indices. I want to see what happens. To me, for day traders, there'll possibly be some shorting opportunities, but all the news is going to create some big bounces and swings, and we'll see how that happens. And you really won't know how that weekly candle closes until the market closes, until my next video, because it's going to do its final really big move, its big reveal. It's going to do that after 1:30 p.m. UK time as it goes into the close. So in fact, actually fair to say probably after 3:30 or 3 p.m. next Friday is when it will start to decide which way it's ultimately going to go. So you're going to get the last few hours will give you a clue, but you want to see where it closes. And if it closes really right on the edge, that's going to be a strong indication of where it goes next week. So trade carefully, cautiously, manage your risk appropriately, please. And thank you very much, and have a great week.